Hey everyone, welcome to The Explainer. I am absolutely thrilled to guide you through today's deep dive. Now, if you've been watching the tickers, you already know that Thursday, June 18, 2026, was an absolute roller coaster on Wall Street. We saw this crazy synthesis of macro shocks, AI lags, and structural shifts that literally rewired the trading day. And listen, when I say it was a massive day, I mean it was truly historically massive. We are talking about the largest volume day on record. The sheer scale of the trading volume we just witnessed, which, by the way, was overwhelmingly driven by tech stocks, is just staggering. It's really the perfect stage setter for the rest of our analysis today. So, to make sense of all this, here's our game plan. We'll kick things off with macro shocks and market rallies, then we'll dive right into the AI tech paradox. After that, we'll look at man, machine, and risk, explore some fascinating stuff in culture, sports, and resumes, and finally wrap up with hidden threats and a look ahead. Okay, Section 1, Macro Shocks and Market Rallies. To really understand the massive equity bull run we just saw, we've got to look directly at a major de-escalation in global commodities. Just look at the contrasting realities we've got going on here. On one hand, you see equities absolutely soaring. The Nasdaq Composite up a staggering 1.91%, closing over 26,000. But then look over at the commodities and bond markets. They are telling a completely different story, a story of de-escalation. Brent crude is down, gold slid by over 3%, and the 10-year Treasury yield is actually dropping. It's literally the classic peace premium in action. And we can actually trace a really clear cause and effect chain for this peace premium. Step 1. President Trump signs a 14-point MOU with Iran. Basically, it's a 60-day pause in hostilities specifically aimed at averting an economic shock. Step 2. That pause triggers the lifting of the U.S. naval blockade, which gets Strait of Hormuz traffic right back to pre-war levels. Step 3 is the supply reality check. What everyone thought was a shortage immediately projects as a glut, sending retail gas below $4 a gallon for the first time in 2 months. And Step 4? Well, the market result. Diffusing all that geopolitical tension sparked the massive equity rally we just saw. Now, the really crucial point here is how the market completely ignored everything else. Just juxtapose that massive rally against Fed Chair Kevin Warsh's debut. Warsh totally stripped away traditional policy hints. He was terse, he was hawkish, and he was strictly committed to inflation reduction. Yet the unstoppable stock traders, they just powered right through it with sheer tech momentum. They stepped right into the breach entirely and kind of ironically, shrugging off the policy shock. All right, moving on to Section 2, the AI tech paradox. Let's pivot from the geopolitical surface and dive down into the subsurface of the tech world to examine the massive investments driving this record volume. This brings us right to the core of the AI tech paradox and this really fascinating concept of the CAPEX lag. Right now, the stock market is absolutely salivating over visible, present-day earnings. It's like the tip of the iceberg catching the sun. But beneath the surface, much of today's earnings growth is kind of an illusion of timing. We're seeing massive hyperscaler infrastructure spending happening right now, but those actual massive hidden costs, they won't even hit corporate income statements for years down the road. And we're seeing an immediate real-world split in how tech hardware is playing out right now. On one side, you have Apple facing a severe memory chip shortage. CEO Tim Cook is out there stating price increases are basically unavoidable, potentially pushing the base price of the iPhone 18 Pro up $200. But then, contrast that against Intel. Their shares just surged 11% to hit a record high. Why? It was entirely driven by a major U.S. domestic supply chain boom, a 10% government stake, and an Apple design partnership. It is quite literally a tale of two tech giants. Okay, Section 3, man, machine, and risk. Let's shift our focus from the AI hardware down to AI application. Specifically, we're going to peek into the high-stakes world of algorithmic trading. It's the million-dollar question. Literally, who is the ultimate trader, man or machine? Think about it. When you hand over the keys to the financial kingdom to an AI, what actually happens? Well, to answer that, Elm Wealth actually ran this thing called the Crystal Ball Challenge. They gave a bunch of AI models a $1 million fictional bankroll and had them trade on blacked-out Wall Street Journal headlines. And guys, the results are stunning. Just look at the differences in risk strategy. Claude was cautious. It parsed the headlines excellently and walked away winning an average of $2.6 million. But then look at Grok and Gemini. Grok was highly aggressive, almost cocky really, peaking at $3.2 million before totally flubbing the finale and losing money on average. And Gemini, Man, Gemini was just reckless. It multiplied bets despite poor parsing and ended up losing over 50% of its bankroll. So here is the major takeaway from Victor Hagani, the founder of Elm Wealth, who, by the way, personally lived through the massive 1998 long-term capital management hedge fund blowup. His conclusion? A slightly smudged crystal ball is completely useless without risk management. These reckless AI failures totally prove his old LTCM warning. High smarts plus high risk equals systemic failure. It turns out AI models are great at sizing coin flips, but terrible at managing complex investment risk. So whether you're a human or a supercomputer, index funds still remain the smart choice over active trading. Which brings us to Section 4, culture, sports, and resumes. Let's take a macro to micro pivot here and look at how value is being unlocked and cleverly manipulated in culture, sports, and the labor market. Talk about unlocking value. Take a look at this massive asset bridge for the New York Knicks and Rangers. Back in September 2025, they were trading at a steep discount of $5.3 billion. But accelerated by a championship run and a literal million-person ticker tape parade, the math completely changes. If you separate the two teams into different companies, the combined true asset value skyrockets to an estimated $13.75 billion. That is a massive, massive long-term value unlock for investors, simply by restructuring. But, value isn't always about billion-dollar structural changes. Sometimes it's all about viral microshocks. Notice the contrast here. You have the absurd macro opulence of the NFL, like Los Angeles' state-of-the-art $5 billion SoFi Stadium, complete with these giant glass fishbowl press boxes. Set that against grassroots viral metrics in global soccer. Cape Verde's goalkeeper Vozinha held the European champion Spain to a 0-0 draw. In a matter of days, his Instagram followers exploded from 50,000 to over 13 million. That's 7 times the following of the Knicks' Jalen Brunson. It just goes to show how top-heavy tournaments can create massive, totally unexpected cultural value literally overnight. And speaking of gaming the system, let's look at the everyday labor market. AI grunt work is currently creating a massive screening dilemma in finance hiring. But job seekers, they're brilliantly fighting back against the AI by gaming the algorithm. In one wild case study, an executive added an unbelievable 56 individual, highly specific skills to his LinkedIn profile. He posted regularly and stacked recommendations just to hack the AI screeners. And the crazy part? It actually worked. He secured an executive role in exactly 4 months. Finally, Section 5, Hidden Threats and Look Ahead. It's time to look at the rapid-fire terminal chatter and the masked global threats looming right on our radar. The absolutely crucial point to remember here is that despite the overarching market euphoria we discussed at the start of the show, the global threat radar is flashing red with some severe, disparate friction points. Point 1, we're seeing severe Middle East tensions, specifically differing strategies and friction between President Trump and Benjamin Netanyahu regarding the ongoing conflict. Point 2, global cyber infrastructure is actively being hijacked, turning everyday consumer electronics into a masked global threat layer. And point 3, we're tracking escalating cocaine trafficking in Colombia ahead of their elections, happening right alongside Russian drone strikes setting historic cathedrals ablaze in Kyiv. The world remains incredibly volatile right now. Now, amidst all that heavy geopolitical tension, there's actually some bizarre terminal chatter lightening the mood in D.C. right now. It's being called the Cabinet Diet. Get this. Top government officials, like Health Secretary RFK Jr., Commerce Secretary Howard Lutnick, Transportation Secretary Sean Duffy, and VP J.D. Vance, have all universally adopted a diet of strictly grass-fed meat and sauerkraut. The insight here? They're embracing it for slimmer waistlines and glowing skin, though apparently it's causing quite a bit of domestic friction due to the, let's just say, slightly sulfurous odors. Okay, looking ahead, here is your immediate actionable runway. Markets are closed Friday, June 19th for Juneteenth, though state and city observance remains wildly inconsistent. We resume Monday, heading into a big week. Tuesday brings FedEx earnings and global manufacturing data, the PMI. Wednesday, we get Micron Technology. But you're definitely going to want to circle Thursday, June 25th on your calendar. That is when the BEA releases the Fed's preferred inflation gauge, the PCE price index for May. Given Chair Warsh's hawkish stance we talked about earlier, this data drop is going to be absolutely critical. And that wraps up our briefing for today. We've gone from the record-breaking highs of a peace-fueled tech rally all the way down to the systemic risks of AI trading and global geopolitical threats. Before you go, I want to leave you with a final, provocative thought. In a market currently driven by unpredictable algorithms and incredibly fragile peace premiums, are you prepared for the massive hidden costs lurking just beneath the surface of this rally? Thanks so much for joining me on The Explainer today, and keep your eyes on the data.